When I get the area, the structure, and the candlestick, this is what it means having a high quality setup. And when I have the area, I have the structure, or maybe I have the area but I miss the structure, but I have the candlestick, more often than not, that is a valid setup. If the daily time frame has confirmed that we are going long, then we should find the reason in the H4 time frame to go long. If the daily time frame has confirmed to go short, then you should find the reason to go short. I want just to show you clear insight, the thought process behind Audcad. Now, on the daily time frame, what I was looking more was this mainly three things. I was looking on the area, structure, and candlestick. As you know, this is the formula that I normally use to really come out into understanding if a trade setup is high in quality or low in quality, or if it's valid. Okay, so to keep it simple, when I get the area, the structure, and the candlestick, this is what it means having a high quality setup. And when I have the area, I have the structure, or maybe I have the area but I miss the structure, but I have the candlestick, more often than not, that is a valid setup. You need an area because area is a must. Okay, if you don't have a area, or you are not sitting around the area volume, then you are missing something. You should stay out of that particular trade setup. So now let's look on how we can apply that into the market. Now coming back to the market now, as what I told you earlier on, we need area. Okay, area is our most crucial part in trading before anything else, because we cannot trade if we are not sitting at good area volume. So in taking any trade setup, you need to sit at a good area volume, area that has enough liquid to really take the market from one point to another. That's a must. Okay, and if you are missing a area of volume, or you have a near miss, just understand that the market will always gravitate back toward that particular area before it makes a big shift or turn around into the market. So in this particular trade setup, I saw that we have a near miss toward this particular high. Okay, and the price just started to show us some signs of selling off, but this was just an early sign that this could not go further. It's just the market just maybe creating something of a middle section, or just finding its volume to still come back to these particular areas. Okay, that was our first thing. Now after that, I started to see, are we currently at any area of volume? Okay, and then I realized that in this particular area we have an area volume. Okay, we have an area volume whereby the price came back to these particular areas in a form of a structural approach to grab some more volume to really come back to this previous high. So that was a good thing. Then secondly, I looked on the structure, because the structure we normally find it around that particular area volume. And then I discovered that, okay, there is a very clear structure that I can see is clear and obvious for me to really understand, and then also get some insight around that. Okay, and then afterward, I started looking also on the candlestick, because the structure just gives us a clear indication of the direction, because here we had more of a reversal structure. Okay, so it meant to us that we are likely to push to the upside because we came from the downside. So if it's a reversal, then it's an indication to push more to the upside. So after seeing that, I saw that, okay, we have closed with a nice bullish engulfing candle or momentum candle, which is giving us some more signs that we are likely to push to the upside. That's when I opted to go to the H4 time frame. Now the H4 time frame's duty is to do mainly two things. First one is to act as a substitution of the daily time frame, but for today I won't be touching on that. I'll just be touching on the second point, which is also to ensure that it confirms the direction that we want to go or to move. For instance, if the daily time frame has confirmed that we are going long, then you should find the reason in the H4 time frame to go long. If the daily time frame has confirmed to go short, then you should find the reason to go short. And if the trade setup on the daily time frame has confirmed to be neutral, meaning it's valid and it can go either to the upside or to the downside, that's also already an indication within itself that we can either go to the upside or to the downside. So we should also prepare ourselves in both scenarios, in going to the upside and in going to the downside. Now, let's start to find the reason to go long, because this was more the case of the reason as to why we are looking to go long. The first number one reason was this particular area. We can see clearly that we have a near miss. But secondly, also, we can see that we are sitting at a good footprint area or a hook point, whereby we approach there structurally in the formation of this falling wedge. And we know the falling wedge formation is always an indication for us to go long, because it's a reversal structure. It's one of the reversal structure. But also, I saw the reason that we had already impulsed very clearly to the upside. And then also I saw that we had already started to see the price giving us some signs of continuation or developing into a continuation state, because this was more of a continuation. That is when I confirmed that, okay, even the H4 time frame is giving us more than enough reasons for us to go long. And then it's when I opted to go to the H1 time frame. Now in the H1 time frame, we had formed something like this. Let me just squeeze the price a little bit forward. We had already formed something like this. It was nearly closing, but I was roughly like 3 minutes or maybe 2 to 4 minutes away from this kind of closing, and I did not have to wait too much because we are quite so near, but I just opted to place my entry just above over there with my stop loss just underneath, because we are close in closing this particular candle. So everything was there. I just placed my entry over there and then just waited to see how the market will respond. Then afterward, I was tagged in. Then I saw the price just moving. Then there was a retrace over there. But before that retrace over there, we were running roughly 1 point something. So I had already moved to break even and then let the price just leave it over there, because we saw again the retrace candle. Like so, yes, it happened like that. And then I was just patiently waiting. And then it happened to be a retrace again. I was just patiently waiting, because sometimes the price is just forming some clear continuation to still push to the upside, understanding that we have this previous high over here, which is our area of inflection. So always the price will stack around those particular area before we see any next move. So I was very patiently in waiting. So then price just pushed to the upside, and then from that particular area I just moved my stop loss around this particular area, which was around 0.5, and then I had to wait. The market just started pushing. I saw something like that, okay, and then I understood that, okay, we have already cleared this particular area. So after clearing that, we need to be a little bit aggressive into our management. So I just squeezed a little bit over here for 1.86 like shown, and then from there I saw that the market just did something like that. Then I saw, okay, we are closing, or we are quite so near into this particular area. Let's see what the market will do next. Now whenever you see these rejections, they are rejecting from nowhere, it's always a sign that we might see a deeper pullback before we see any shift in price, or it might be just a retrace, a heavy retrace. Okay, so around this particular area we were running nearly 4 point something. Yeah, so it's 4.4. So I locked in 3.05 if I'm not mistaken. Yes, around this particular area. Yes, exactly. Yes, was 3.05, and then I just had to wait and see how the market will be responding, because this was already a sign that we could have a deeper pullback. Then what happened next? I was just tagged out because the market just retraced, and then I was out for 3.05%, and I was happy with that particular trade, because at the end of the day the price just hit the area that we were expecting it to hit. So yeah, I thought that I could just give you more insight about that, and then giving you more clarity on how you can really position yourself. Please do let me know what's your major takeaway into this particular recap, because that really makes me to really stay grounded and knowing that we are passing the right values, we are passing the right clarity, because that is our job. God bless you, and see you in the next one.